Alright guys, making my second video for today. What do you know? If you bought below here and you bought below here, you're probably green right now, right? Okay, so what did I say? The strategy I taught you guys, it works, okay? Now, okay, too soon to tell if this is the move that's going to take out these highs and keep going. There could be more this. It could come turtle soup this one more time. So if it comes back below here, I would be looking to load up big. I'm not kidding, guys. If it goes back below here, I would load up really big. Anyway, what am I going to talk about today? I'm going to talk about the fundamental concept of I'm going to briefly talk about how money is a zero-sum game, right? Let's do like a Google drawing. I'm not gonna, this is going to be sloppy. This isn't going to be good, but I want to give you guys something visual to look at because I don't do that enough. I'm going to try to work on doing more like visual stuff so that you guys can like conceptualize it or retain it a little bit better. Okay, but so what am I going to talk about? Okay, so I know in a previous video I said that like interest rates went up in the 80s and that actually led to higher prices. Okay, that wasn't actually correct because, well, they went up at the end of the 70s and the early 80s, but they actually decreased throughout the 80s. They still were relatively high throughout the 80s, so I apologize for that mistake. But so basically, yes, usually higher interest rates lead to a recession. Not all the, but like most of the time, yes. Okay, so because now we're raising interest rates, you would expect another recession to happen, correct? Okay, so now I'm going to explain why another recession is not going to happen. So let's say that, because if that happened, first off, if that happened every time, so let's say interest rates, and then it'll go up. Okay, now you can disagree with me, and technically I could be wrong in the future. If we'll see. Okay, but watch. This is why I'm pretty sure that what I'm going to say is going to be correct. Okay. So this is going to show you how money is a zero-sum game, and that's all that matters. All that matters is outsmarting your opponent. Okay, and this is what the banks and the rich people are really aiming to do. Okay, so that's a really bad arrow. I'm gonna get a it's gotta be a, there we go. Interest rates go up, market crashes. Okay. Okay, so now here, this is going to be kind of weird. Okay, so I hope this helps though. So interest rates go up. The pattern is interest rates go up, market crashes. News, retail, etc. reinforces this concept. People in the know need to take money from losing traders. Pattern. Break the pattern. I'm going to really spell it out, just like you guys are like 3 years old or something. Retail bets on a crash as interest rates go up. I don't know why I'm all using all so many capitals. It doesn't matter. Okay. So. People in the know break the pattern. I could have just typed this out. I don't know what I'm thinking. I was going to probably use symbols and stuff, but whatever. It doesn't matter. Okay. Then, so then we say interest rates go up, market goes up. Oops. Sorry. Excuse me. Okay. Do I shift click this to copy it? Nope. Just control click it. Okay, there we go. All right. So this is pretty much what this is what I'm trying to explain. This is what all my videos are trying to explain, right? Now the pattern doesn't have to be this, but this is one element of their game plan, right? This is their playbook, right? This is how they make money. It doesn't matter what the data or the trend or this, that, the other say. What matters is what the people, the wealthy 1% who control these markets want you to believe in order that they can take wealth from you, right? It's not about what tends to happen. Yes, trends are a real thing and there are patterns in history and you can bet on them. True. But if interest rates are going up during a crash and then we start coming out of a crash and interest rates are, well, they might be even being paused, okay? But they might, I think they could continue to go up, honestly. But that's not going to lead to a crash this time, in my opinion. Again, not financial advice, could be wrong. But if everyone is being led to believe that, then what matters more? If in a zero-sum money game, what matters more? The correlation, yes, I'll say correlation. It's not a complete 100% correlation, but the general trend that there's a correlation between increase in interest rates, preceding a recession, like leading up to a recession. What's more important, that trend that everyone is aware of, which gives you no edge, or the opinion that trend is that trend is a sure thing, and the ability to abuse the assumption that trend is causation and then subvert it by doing the opposite of that in order to take money from everyone who thinks they're smart enough to bet on that correlation, right? This is how the market works, all right? I'm not some sort of super genius for figuring this out. I've just I've been a bit of more contrarian minded person, not like deliberately, but just like when people, there's a lot of lies in this world, and it's not just money, like there's lots of lies in social interactions. This world is just full of untruth, okay? Just from your day-to-day social interactions to money things, people lie to themselves, they lie to other people, right? Because people are afraid. And in a world that there's a lot of fear in, people interested in self-preservation often lie to either escape consequences or to take advantage of somebody else when they can gain something by doing evil and lying, right? Anyway, I'm not going to get too into that, but this is a world where lying gets you ahead. Okay, it not always. Obviously, people get in trouble for lying. Some lying is illegal and you can go to prison for it. But when people can get away with doing something bad, they tend to do it if there's something to gain from it, right? I'm not going to get into why that this world is that way. If you know, you know. You can do your own spiritual journey and eventually arrive at the conclusion as to why that is. I'm not going to take you there. Only you can take yourself there. But in my studying of markets for several years, but very vigorously for the past year and a half, this is what I've come to the conclusion that the most consistent indicator for market bias is essentially this. It's taking advantage of people's beliefs and then doing the opposite of them. It has nothing to do with, I mean, I won't say it has nothing to do with, but the technical and the quote unquote fundamentals, they go out the window at the drop of a hat. Okay, if the market's in a recession, good earnings, well, there's not going to be that good earnings, but good earnings don't mean jack shit. Sorry, pardon my French. Okay, in a bull market, yeah, do earnings plays. I've said this so many times. Quullamagie, Quullamaggie. Let's just go on and look at who this guy is. This guy, if you want to learn how to trade, okay, this is the guy. Do you know how much money this guy has made? This guy started trading in 2011. He was a losing trader for about 2 to 3 years. Then from sometime in 2013 to 2023, so the past 10 years, after blowing multiple accounts, a few accounts those first few years of trading, he studied charts for thousands and thousands of hours. He studied earnings plays. He studied bull and bear markets. This guy turned less than $10,000 10 years ago into $100 million purely through trading. He does not day trade. He position trades. He doesn't do options either. He trades earnings plays on small, mid, and now that his account is so big, large cap stocks during bull markets. He even failed to recognize, because he didn't know about the Michael S. Jenkins thing that I know about last year. So he makes that money not even knowing ahead of time when a recession is going to happen. This guy doesn't know. He doesn't know this. He just avoids the news. So yeah, he's a good technical and fundamental trader. But again, everything has its drawbacks, right? So I point you to this guy for the sake of learning how to technically and fundamentally trade stocks in the right conditions. But what I'm teaching you, what makes me unique as an educator on YouTube, is this perspective right here, because no one else will teach you this really. I mean, maybe someone else knows about this, but I never learned this stuff from anyone else. This stuff I figured out on my own, okay? This is how you know when the market conditions are ripe for selling or for buying. And right now they are very ripe for buying, okay? But this guy is good at recognizing bull markets. So he struggled, lost a bit of money last year. I don't think he was even profitable. But this year he has been massively profitable. I don't know how big his account is now. Honestly, at the end of 2021, actually his account was around $80-something million. So when I say he's made $100 million, I don't know that for sure. But knowing that maybe he lost a bit of money last year, but now that he recognized all the earnings plays and stuff, I guarantee you his account is probably around $100 million right now. And he started with about like 5 G's, $5,000. That's all he started with. Now, anyway. So yeah, I'm pointing you to this guy. Learn this guy. Watch his videos. He's kind of funny guy. He's pretty he's kind of abrasive, but he's very real about things, and he's no BS. He'll teach you how to trade. He doesn't waste his time on stupid stuff. He gets annoyed when people ask dumb questions. He just teaches in no BS how to actually trade, okay? So, but this is how you identify the correct conditions where this guy's long setup strategy works. Now, he has other strategies. He has a short setup strategy. I haven't studied that very much because in a long bias market, it doesn't really matter, right? Only during a recession. By the way, also, I don't paper trade, but I just want to paper trade today, trading essentially his strategy, doing a day trade. I still struggle as a day trader. The best advice I can give for day trading is that you have to learn long-term position trading so that you can understand long-term bias, and then you while you are also taking long-term position trades, try to capitalize on portions of those same trades intraday. That's the only way I can see being consistent. So my trade today was trading Coolamaji opening balance on the NASDAQ 100. So the first 5-minute candle, once this high was exceeded, well, I actually got in a bit early, but I knew it was going to be exceeded because my bias is bullish. So I took a bit more of a gamble, lower probability, but put my stop here below the low of the opening 5-minute balance. And then I went for a 2-to-1 on the first contract and then a 4-to-1 on the second contract. And so I just won those contracts. Okay. But the thing is I'm not just doing that alone. I have my bullish bias based on this stuff, knowing that it's a bull market, not being suppressed. So I wasn't, if this had been like red and trying to sell off, I probably wouldn't have even taken the trade because I'm not interested really in short selling or selling the market. I guess it's not really short selling on futures, but I'm not really interested in taking short positions now. So already that improved my probability and chances of success. Is I eliminated the very idea of taking a short position. I also know that retail's trying to short. They just got baited in because if you look at the daily chart, right, people thought it was crashing. There's technically a quote-unquote market structure shift to the downside on the daily chart, which is an ICT concept. But if you know what I know, that even that stuff gets superseded ultimately by this. This is the most important thing to trading. Then after this, what this guy knows is the next most important. Then study ICT concepts so you know how to get technical about it and have good entries. And you'll be well on your way towards profitability and making enough money to take care of yourself for the rest of your life and your family. Okay? So, okay, this video actually went on longer than I expected, but I hope that this just gets the ball rolling for you guys, okay? Because now is the time. We're in a bull market. Yes, prices have already ripped extremely high, but if you know how bull markets work, this high, if this really is a bull market, this high is going to get left in the dust sooner or later. All right, it's probably this year, definitely next year, in my opinion. This high is going to be long forgotten. Okay, the market is going to go well past that high, in my opinion. Okay, so you might think, well, I missed all this. Well, yeah, you did because you didn't know what I'm telling you. But I'm telling you now that if you use my technicals, you use Coolamaji's technicals, you use ICT's technicals, and then you use all of our fundamentals as well, you will get there. And I'm literally handing you on a silver platter the direction that the market's going to go in. Okay, I could be wrong, but it's already playing out. I already told you, like I made videos recently. I said I bought below here, and then you buy below there, and definitely buy below there if it ever comes back there, which it probably won't give us that chance. As long as you buy below the low of a red day, that's not the high, or a red week, look at the week. Like I said in that other video, I bought like a lot of call options that expire next year below this red. It's not that difficult. I'm giving you ways to make it more difficult and get more technical and advanced with it so you can be more skilled, but not completely necessary. But inevitably, if you do this stuff, you'll want to learn that stuff. So just look, I'm just giving you everything that's actually worked for me in the years that I've tried to learn how to trading. Okay, so yeah, take care, guys. Like this is it. Like it's actually not that complicated. There's kind of a lot of moving parts, but you get familiar with each one, and the more familiar you are with them, the less complicated it seems, and the more easy it seems. It's kind of like learning a language. Like learning a language is one of the hardest things at first, right? The more you practice it, the more you study it, the more you use it and apply it and spend time on it, the easier it gets. I guarantee you, Coolamaji, dude, he himself has admitted, he says he doesn't consider himself a smart person. So what he did was made trading easy for a dumb person. Okay, so he now I think he's selling himself short. I believe he's probably highly intelligent. But the thing is it wasn't just his intelligence that got him there. It was just just the nature of the human brain to learn through repetition, of just seeing the same thing over and over again and getting better at looking for what you're actually seeing, right? Anyway, I've said enough. There is another YouTube channel I found where the guy explains Coolamaji's strategy really easily, so maybe in my next video or one of the coming videos I'll tell you guys about that if I remember to. But yeah, yeah, I think I'll get into that next time. But anyway, I've dragged on long enough. I hope this helps, guys. Take care.